So someone is asking, how is capital gains taxed? And I know it depends, right? Whether it's capital gains, it could be from securities income, in which it'll be treated in a certain way. It could be from real estate, so it is a wide kind of question, isn't it?
Yes, we need to confirm the nature of the capital gain. But to give two examples, we can consider capital gains on the sale of real estate, for example. The rule would be that those capital gains would be taxed in the country where the property is located, and therefore exempt from taxation in Portugal. This would be the most common situation under the double tax treaties concluded by Portugal. So taxation at source, exemption under the NHR regime in Portugal. With respect to securities, it's the opposite, because usually the double tax treaties allow the taxation at the country of residence, which in this case would be Portugal, and then is granted under the NHR regime. There are some exceptions to this rule. I can recall, for example, Brazil, double tax treaty concluded between Portugal and Brazil is an exception, but the most common situation would be that the capital gains on the sale of securities would be subject to taxation in Portugal under the NHR regime.
Thank you very much for that. And so generally speaking, and so this is one thing that we want to get clear. I know that the NHR is very nuanced. It's not as simple as like the Beckham law next door in Spain, the flat tax in Italy, res non-dom in Italy or in Ireland or the UK, where it's really domestic income tax, foreign income not taxed. So with the NHR, it's quite nuanced. There's some things that are and some things that aren't, and they're varying rates. One of the big shocks that we see with our clients, one thing we recommend is not just that you get advice, and this is something that you can do, not necessarily with us, but whoever your preferred tax team is, run a model. Let the math drive your planning decision. So we help clients run models where we say, okay, you may not have moved to Portugal yet, but if you were to move, this will be what your US return looks like, and this is what your Portugal return would look like. And then if you see something that it's kind of okay, you can deal with it, then fine, give it a thumbs up, let it ride. Otherwise, we can look at it as we can look for planning opportunities. So one of the big sticker shocks that US persons get when they move to Portugal, I mean, this is the most common one, would be securities income. They have their investments, they have, ETFs, they have whatever funds that they have, stashed away. And then suddenly they realize, my goodness, this is subject to what? Such a high tax rate in Portugal. So a lot of sticker shock. Again, sit with an advisor, understand how the math works, and there are planning opportunities around that. But generally speaking, capital gains, tax-free outside of Portugal, as Augusto mentioned, but securities income, and for the type of clients that we deal with, that's a major part of their wealth portfolio. So this is something that really requires attention before you jump in. Hope that helps.
So if you're a 6, 7, or 8-figure investor, entrepreneur, or business owner who needs a tailor-made solution from a qualified team of professionals, we can help you achieve the international lifestyle, the freedom, and even the tax savings you're looking for. Visit us at htj.tax and live that international life.